Hello, hello, hello. Happy Wednesday, Fed Day, everyone. Good morning. How's everyone doing? Good morning, Heinrich. Good morning, Patrick. Good morning, Sterling. Good Sterling putting in the Elon Musk compensation package smackdown by the Delaware Court of Chancery. Paramount up. Yep, Paramount. At some point, it was going to be a takeover candidate, and there you go. Finally, a bid, a really strong bid. Let's see. Yep. Luxury home prices hit all-time highs. Record share of high-end buyers pay cash. That's what's going on around here. Going on around me. A lot of the deals are cash offers for $1 million properties. So what else we have? We have Boeing. We have MasterCard. MasterCard was a slight beat, but still a slight gap down. Boeing. Didn't they cut Sterling? Did you? They didn't give guidance for the rest of this year though. They cut guidance. I think that's what was my big takeaway, which is not necessary. Yeah, there it is. They suspend forecast for 2024. I didn't see that yet. Good. I'm not even needed anymore because we got Sterling. Good. Delaware smacking my little Tesla play. Hope that was a bounce play only, but it technically makes the stock more valuable, but the stock's already overvalued anyways. But it's more of an Elon. Is Elon going to take his ball and go home from Tesla? Mike, read this one. NYCB, the bank that absorbs Signature, is down 28% pre-market, citing weakness in its commercial real estate book. Yeah, CRE is not going to... I think CRE is going to be a disaster. Good morning. I like that though, Mike. Read this one. Okay, let's get going with stuff. So we had the mortgage information out earlier. Mortgage rate pretty much held steady. We had the employment cost coming down. Employment cost coming down. Index coming down on a quarter over quarter. Wages coming down. Benefits coming down. So you have some positive inflation news there. What else we have here? We had the Treasury refunding announcement. I know Bob tweeted out about that, but that was increasing the refundings and putting it with the twos, the fives, the sevens, the threes, increasing that. We'll have to see. I have to do some more analysis on that. Chicago PMI, 15 minutes after the cash open, should still be in contraction. That is a minor number. We got the EIA crude numbers. 9:30 Central, but the big thing today, 2 p.m. Eastern, the interest rate decision is going to be a pause. The real thing is what he says, what Powell says, what Jay Powell says during the press conference, and the guidance for March. Where does it sit right now? Let's do a quick refresh. Let's do a quick refresh 1 second. Oh, come on. Don't. There we go. There we go. We're still now it was slightly favoring a pause in March. Now it's slightly favoring a cut, but this is good. I think it's going to change today. So we will see. So as it stands right now, cut in March or May, really, because this is so close to 50-50. A cut in March or May, and then after those two cuts, the rest of the year. So 6 cuts total. How do we look this morning? Google, see, this is what I was talking about. As I've said, the market kept going. Everything's priced for perfection. Google technically beat. Their ad revenue was down, and they're off. I mean, their earnings weren't bad, but they've been ramping up price for perfection, and the market said, "No, you didn't do enough." Didn't do enough, even though you did decent earnings. It was not enough, down 5%. AMD, but this was not a shock to me, being at like 1,400 P&E. And everything that was there. If it's not AI, it sort of stinks. That's my summary of the conference call. So all chips down. Microsoft, again, really good results, but off after the earnings, because again, priced for perfection. That's what this market. Tesla down, as was mentioned, with the voiding of Elon's pay package. But it looks today, if you just look consumer defensive, healthcare, our rotation into that. Boeing's actually up nearly 2%. Well, that one surprises me. MasterCard, we had this morning down 12 basis points. Not much. So Boeing up. Boeing and MasterCard were the biggies this morning. In terms of groups, let's just do a quick refresh here. See healthcare, utilities, but nothing. I mean, it's really comm services led by Google down and technology. So that's where the markets are dropping right now. Already looked at Fed Watch. Still, this might fall if it continues to pull back today, but we'll see if it just falls back into upper end of greed mode. Finally getting some kind of pullback. After closes Qualcomm. That's really your big one. And remember, tomorrow, after you have Peloton, that's going to rock the markets. You have Apple, Amazon, and Meta. So we'll see if the trend continues. If the trend continues with, okay, decent earnings, but we're going to sell it because it wasn't quite enough or it's priced to perfection. Has this done any major technical damage? No. No. Not after this kind of run up. I mean, look at this. Since the beginning of since Friday the 5th, I mean, this is pretty substantial run up. See, on the weekly, even look at since November, this thing has, I mean, the first major sign of technical damage would be if it gets a low close below the close the week of the first week of January. And or especially a little more if it breaks below that low, but it still technically wouldn't have voided the rotation zone. If you look at the big picture, it's barely a blip. Barely a blip. Now, we had a little mini double on the 4-hour that completed. That was about it. So, and now we're back to a very key horizontal correction. So we're into a very key support area. Going into a Fed meeting. Will the Fed be dovish and, or will it be interpreted that Jay Powell is dovish and gonna be, market goes back up? Key area I'll be watching, though, if the market rallies with anything with the Fed, is 49, 43.50. Right around that area. Close above there. Puts me retest the high camps. The high camp. Could this roll into potentially a bigger topping pattern? Yes, but we're not there yet. So that's what I'll be watching. Other than that, if it continues to break down, you come into a really strong support area just right below here, 49.18, 49.20. It will need some substantial momentum to start breaking through that. And you also have the rotation zone right here at 49.12, the key 8 EMA. So coming into a lot of support just lower with Fed meeting. I'm going for, choppier at least in the Fed meeting. I am not prepared for a lot of trend unless something comes out of the blue because, again, there's no other reports. Chicago PMI is not going to do much with the markets, even if it was a big beat or big miss. It's really just looking at this coming in to the markets. If you want to watch something on the shorter term, let's see if this continues to pull back over the next little bit. It could be it's not in percent B buy territory yet, but that's going to still make this 49.37 the first key area. It has to really break. Other than that, the major, if you're looking for the key line in the sand recently, I mean, we're well off. You need to get back below 48.25 before you get some really key stuff. I'm on Seeing the Futures today at 9:30 Central with NinjaTrader. So if you're interested in that, it's, going to be talking markets, futures markets specifically. So we shall see about that. Then I'm on with Bob and Jim this afternoon. So at 3 p.m. Central. So lots of opportunities to potentially see me today, if you even care. Yesterday, NASDAQ stalling out, first target of the double, rolling over, and then, we had earnings in the afternoon, and so coming down, still targets, stop reduction target, or some people use it as the first profit target, 17,289.50. So still would be no stop reduction. 17,205, then 17,121 area is the key stuff lower. Now this is trading back into the advanced clear path from the run up last Friday. So keep that in mind. The key area, the stop for that double still would be the farthest stop that invalidates the pattern would be still a close about 17,667.50 based off of where the market's trading because we haven't hit the stop reduction yet. Based off what if these lows hold going into Powell, then my key area is going to be 17,621. Because it's got some heavy lifting to do. 17,500 is going to be some very key resistance that was broken yesterday. Also, so we made a slightly higher low from back in the lows on the 23rd of January area, but then we've made a lower high. Now we're making the first lower low, so we're going to have to see if this is starting to shift the panel, the trend and getting a slightly bigger pullback. But also, again, has it done a lot of technical damage? No. Even a pullback to right now, 17,000, is it just a return to the prior key breakout level. You see right here, prior key breakout level, the 50% retracement from the run-up from the first week of January lows. So that would just be a normal pullback. What else have I missed? Hey, Christoph. Good morning. Did I say good morning to you? Yeah, I think I did, Royal Palm. So you got a second good morning. To your point from yesterday about nothing making sense, well, Starbucks, thanks for bringing that up. Starbucks, and this conversation I'm having with Jim and Bob today is on earnings plays. And I was actually going to talk about Starbucks. Starbucks was a miss, but the guidance wasn't as bad, and look at the short interest. Starbucks was already beat up. I don't want to ruin what I'm going to say, but Starbucks was already beat up, and it's going from bad to potentially less bad with a pretty decent short amount. So this gap up is more, and I'll talk about this more this afternoon, but this, on the face value, it doesn't make, well, they missed, but they missed already getting beat up severely, and there was decent short interest, and a lot of this is short covering. So, I'd be watching for another rollover play personally. This is not like, hey, let's all rush out and buy Starbucks, but that's why. There you go. Canadian US dollar double bottom triggered yesterday with 200 MAS support. Could be an interesting setup right there. Thank you, Christoph. So the Dow, again, now it's rotating into the safer plays, the Dow plays. The next key area on the Dow is 38,881, so roughly 38.9. 38.9, there we go. So rotation into that. Is there anything? There's no key topping pattern here. So that's the next key target. Should it continue to march higher? The key really strong support is about 38.75 to 38.6. The Russell still no close above the 62.5, so I guess you still know what level I'm watching for the Russell. Other than that, trading back to it's holding support right now, but it's got to really break below 1970 before it can get overly bearish. This is just not a great topping pattern just yet. Not saying it can't break down, because it's the first thing I'll still look at for short plays. But unless it starts closing about 62.5, then I'll give it a little more leeway. But it's still coming into a very strong support area going into Fed meeting. I mean, everything's going to be on the guidance. It's still sell volatility. Look, there's still, even with the pullbacks and the NASDAQ and everything, there's no fear in the market. No fear. It's still sell vol. It's going to be also probably people trying to rush in at some point after tomorrow's earnings. You know, you got Apple, Meta, and everything else to see if it's time to buy the dip yet or not. DAX still basing at recent highs. Nothing to talk about there. The notes triggered a double yesterday, confirmed it on Monday, triggered it yesterday. First stop right now, stop reduction and or first profit target at that 112. 112.06.5 is the next target, then 112.12.5. The yield, which I thought was a slightly better trade, which triggered on Monday, hit the stop reduction yesterday, hit the first target this morning, and now this is a target area, with this being right at the key closes back from Friday. So this is a target area. Personally, I'd be looking to, I would at least be very tight trailing stop going into the Fed announcement. But that's essentially played out. Nothing with the 2-year, by the way. 10-2s, not much to talk about. Either we're going to break above this -8 or break below the -24 or 25 and potentially trigger a double top. Dollar index, still in consolidation. Still watching the about 102.75 now for a close. Crude, trying to base. It's going to be really interesting. EIA numbers come out in just over an hour. Still basing with a rising separating rotation zone. But it has to start getting some momentum back above 78. By the way, the key targets, if this can break out again, the key targets would be about 80.75 and then 82.20 right there. And that 82.20 harmonic also lines up really nicely with another breakdown play. So that's how I'd structure at least the first two target areas if this can break out. Key support 75.50. Gold, still not much to talk about. Yen, not much to talk about. Euro, really not much to talk about. We're still watching this 108.95 area to the upside. Pound, definitely nothing. The spiders pull back right now. So 488.30. We're trading 488.50 just based off the harmonic and the prior resistance becoming support. Below that, you're looking at roughly about 486.50 as the major support. Anything above this, you have to use the shorter term. You can see the support ledge that we're going to be testing in the rotation zone on the 4-hour. On any play, besides looking at where it opens and using your shorter term harmonics, let me fix this. Would be using the shorter term harmonics like I did on the futures. And if it does rally, watch for the 62.5 level from where it opens. If that holds the low around that opening range, the 62.5 pullback from yesterday's high to that area, watch that. And then above that would be the gap fill to 490.88. A very key line in the sand is back at about 485.35. The Qs, which this did qualify as a double on the 4-hour, is going to gap down and trigger it. 420.60 is 420.57, 420.60 area where we're trading going in the open. 420.60 is the first target. So it's going to probably gap to the first target. 419.30, 418 are the next two targets. To the upside, should it move the stop down and hold here? First area of very key resistance is about 423.50, 423.30 to 423.50. Then you're looking at the gap fill from yesterday at 425.30, and then I would look at yesterday's gap down open price, 427.10. Walmart up 1.3 pre-market with announcement of a 3-for-1 stock split. Well, thank you for putting that in there. Let's take a look at XOM real quick. XOM could trigger weekly double bottom after earnings on Friday. Yes, it could. Let me remove this line. Could trigger. It is valid. Look at that. It is valid. Very good, Christoph. If you're using the conservative targets, you guys are spot on. And ladies, where did I see Anissa this morning? Hey, Lauren, how you doing? So yeah, that could trigger on a weekly basis. Nice little bounce back move. Why is that not moved up? Oh, that was a problem. So there we go. All right, let's take a look. Tesla. We had the bounce play. As I said yesterday, tight trailing, especially with that gap up pretty much to the first target area, that 196 area, and then we have the gap down this morning. The only thing you're going to want to see from a bullish perspective is if this can make a little mini double in the short term and then bounce back up. But it's going to be based off Elon's tweets. So that's going to be the volatility here. Remember, it came down to the first target, pretty much all of the double, and looking to hold that. But if that first target area breaks, watch out below. I'm still watching for that to break longer term. NVIDIA down a bit in sympathy on the chips. Microsoft, can see here, not even returning to the daily rotation zone yet, even with this gap down. So yeah, disappointment, but not even a big move yet. More so AMD. AMD, even with this, I'm going to be watching this 161 area. We're trading 165 pre-market to see, but I bet you there'll be a slight bounce up. This was not a major topping pattern, but we've had waning momentum. You see all the divergences. The stair stepping down RSI is pushing higher, and then the stock is insanely overbought. You can see even a return. I mean, this could easily longer term return to the weekly rotation zone. And what else? You had Google. Google now, this is actually returning to the weekly rotation zone. So, starts getting interesting though if it can't really keep holding about 140, 150 on a closing basis this week. So that's some key stuff I'm watching. Hey, there she is, Anissa. Are you gonna watch Seeing the Futures today? What else do we have? I don't know what else. I mean, just don't do something stupid going into the Fed meeting today, especially the press conference. That's a nice little interesting potential setup going into the open. That could be interesting if the 8 a.m. lows hold. We'll keep an eye on that. I will be keeping an eye on that going into the open. But again, I'll be erring on the side of choppier because we got the Fed meeting and press conference. So, with that, I shall talk to everyone later. Have a wonderful trading day. Don't forget, if you're looking for stuff to do, go see me on Seeing the Futures if you don't want to overtrade this morning. And you can just pop in and say hi there. And then this afternoon, after the Fed announcement with Bob and Jim. With that, I shall talk to everyone later. Have a wonderful trading day. Bye for now.